Well, the bulls are back, at least for now. The Dow is trading up in triple digits, so it looks good today, but is the rally for real? Is it sustainable? Let's ask Drew Canale. He is chairman and CEO of Canale Trust, and Adam Bold, chief investment officer and founder of the mutual fund store. Drew, let me go to you first, because we got kind of a tale of two worlds here. Adam is pretty bullish. He believes in this rally, but you don't. You think it's unsustainable, correct?
That's correct. I mean, really, if you want to step back, you're only up maybe 4% year to date. So let's put it in perspective. It has been a very, substantial rally, maybe up 40% from the lows. So you'd have to be, pretty quick on your feet to take advantage of this type of rally. So
well, I have heard people compare it to 1982, but you like to remind them that in 1982 we were just about to have a big tax cut that we were all able to take advantage of, and we were also seeing inflation go down, not go up. So you think that's a bad comparison?
In this case, we have inflationary pressures like no one has ever seen. We're talking about trillions of dollars being flooded into the money supply. It's off the scale. You can't compare this to any other credit cycle that we're about to go into in terms of inflationary terms. So that's what we're looking at Canale. So we're looking at PE ratios contracting over the next several years.
All right. Well, Adam, has he scared you? Has he got you running for the hills or not?
Oh, come on. I mean, David, with all due respect to Drew, I was on your show with Drew on April 1st, and he said, quote, "This would be a good day to sell." We're now almost 1,200 points higher on the Dow. Drew's a guy who wants to make people cry, and
he's nicer than that.
He doesn't have evil intentions. I believe in that our economy will rebound. Now, is this the way that I would have wanted to have an economic crisis and a rebound? No, this is unprecedented. But that being said, I'm seeing lots of glimmers of hope, and the earnings are coming in better. People are starting to spend money again, and the economy is beginning to function in a normal way.
All right, well, Drew, the gloves are off. Go ahead, go for it.
Yeah, these are hopeful thoughts, but they're not grounded in any truth whatsoever. We have another round of mortgage adjustments coming in 10, 11, and 12 that are much larger than the ones that we gagged on in 2008. And
yeah, but Drew, we already know that.
No,
Drew,
I hear you. But you don't know the reality of the foreclosures that are coming. You don't know the reality of the fact there's probably no equity or loan to value in these, and that the foreclosure rate is probably going to skyrocket yet again.
All right, Adam,
so
go ahead.
Any thought of stock of housing stabilizing in the next couple of months, there's no way.
Okay, Drew, we got it. Adam, go ahead.
David, here's the thing. The thing that knocks the market down are not things that we see coming. Remember Y2K? Everybody thought that was going to be a big deal. It wasn't. Now, September 11th, we didn't see that coming. That was a big deal. The global credit crisis, that was a big deal. We know that the economy is not great. We know unemployment is higher than we'd like it to be. We know that there's going to be mortgage resets. All that stuff that we can see is already built into the market. Now, what you don't see are things like companies have gotten lean and mean, and they figured out how to be more profitable on lower revenues. And I think that the ingenuity of the American entrepreneur is strong enough that that any surprises we have are likely to be
Adam,
to the upside.
Give us your best bet. Who has done better at this, at hunkering down, cutting all their costs, cutting their debt down to practically nothing, and are good for the long haul?
Well, certainly it's not General Motors.
Don't tell us who it's not. Tell us who it is.
There are a lot of companies out there. I'm not an individual stock guy. I'm a mutual fund guy. There are some great fund managers who have done substantial. I mean, we have probably 20 or 30 of the funds that we own for our clients that are up more than 10% this year. There are a lot of managers out there who are doing their stock picking, finding those companies, and with the right homework, there are a lot of managers who had bad years last year, and we're separating now the ones that were good managers who had a bad year from good managers who have gone bad.
Well, Drew, I got to say, I look at Art Laffer's figures on interest rates, and I am concerned. I do think that there are going to be a lot higher interest rates and inflation. However, what Adam says is true. There are a lot of companies that have really hunkered down, done the work, and are in much better shape now to survive what's coming. Do you have any picks of those kind of companies?
Well, let's remember, okay, Canaley's still 30% long. We haven't sold every stock we've got. We haven't, thrown out the deal at all. But you do have to look at things like when the 10-year bond goes from 2% to almost 4%. It is telling you something, and you need to pay attention. And you need to have some sort of inflation protection in your portfolio. And if you look at the price of gold, the price of oil, other commodities, they've all done very nicely this year and nicely for Canaley clients. So you need to have a well-diversified portfolio here and not be thinking about what corporate America is up to. You need to be thinking about what commodity prices might be doing.
Well, and diversification,
right now
Adam,
and in the future.
is what mutual funds are all about, right?
Right, and I'm not saying don't have some exposure to commodities and don't have some exposure. I think you should have exposure to those kinds of things. But, everybody's so worried about inflation. I hear this all, inflation, inflation, inflation. And I'm not saying that it won't be a problem at some point in the future, but you don't have to worry. Right now, we don't have it. And what I do know is inflation is not the kind of thing that surprises you. It's not like you go to sleep one day and inflation's 2.5 and you wake up the next day and it's 10.
Unless
We're
you're
going to
in
have
Brazil.
a lot of interim increases and the ability to deal with it in the meantime.
Yeah, well, let's hope we don't wake up in Brazil, because I've seen it happen there. But that was a great debate, guys. Adam Bold, Drew Canaley,
right.
Terrific to have you both. Let's have you back in another couple of months and do the same.
Absolutely.
All right.
Okay.
Well,